Want to take a look at coffee futures today. Nice short trade. So here is the trade. This is a live trade on coffee. Let me resize this window so the whole trade station window is in there. Okay, hopefully that's a little better. Coffee, you see the signals here, and a lot of people get this confused, and I've gone over this. I want to make sure you understand the difference between these bubbles. And a lot of people think, wow, why is it taking more than one trade? Why are there all these red, there's more than one arrow. So this pointed arrow, or this normal arrow that you think is the trading signal right there, buy next bar at market. So it might show up on this bar, even though the signal says buy next bar at the market. These things happen in milliseconds, and the trade happened on, it looks like, see the round bubble right here. If you want to take a look at the difference between this round arrow, you get a round bubble and then an arrow and then a straight arrow. The round one is the actual trade, the fill. And so we got filled at 31.20. The signal was at 31.20, and it looks like the trade took place before the signal, but this strategy goes short next bar at market. And so, because it happens in milliseconds, the bubble arrow could actually show up here if the timestamp is fast enough, even though the arrow shows up there. And so the actual fill was at 31.20. The trade signal is at 31.20. And you see down here, if you click on that, it says strategy, cover at 129.05. Trades, cover one at 129.05. And so we have an $800 profit target. As you know, coffee ticks in increments of 37.50 and half increments of that at 18.75 is the smallest tick. And so I'll take a look at the matrix. I have this matrix, so I can click on any of these markets and it goes to that. And so it ticks in 0.05. And so whenever it ticks in 0.05, you have $375. $375 from, say, 128 to 129, but it ticks in nickels, and so it's $18.75 per nickel tick. And so you don't have the $800 profit target is not it's gonna require it to be 800 or more. And so the next increment is 806.25 because of the way that works out. So you could set your profit target to 806.25 to be exact. You see the OutCP coffee day trader short only. It shows this with the profit minus $75, and so it's 806.25 minus $75 is 731.25 is the hypothetical profit on this trade, but the actual profit is higher. And so you see 806.25 is the actual profit on this trade. And on this window, I don't have the signal, it's just the market. So you see the bubble trade, and so just the actual trade here. You can turn that off if you right click and you go format account orders in positions and then uncheck the first box, and these bubble arrows will go away. And if you want to do that on your trading system workspace, then you'll only see the signals. But I want to show you this to show you the coffee trade. It doesn't trade often, and some people wonder why maybe you have to pay those higher exchange fees for ICE. ICE just charges more. I'm a pro, and I pay about $1,000 a month for all my data fees. And if you're retail, regular retail, you get I think free data on the CME group. But if you want ICE, you have to pay $100. If you want to trade Brent, it's another $100, $110. But I pay $105 for all the exchanges on the CME. So I'd pay $420 just for all the real-time data on the CME group, while if you're a non-pro, you get it for free. So that's the trade on coffee, and one of the trades closing out the month. And so this strategy is in the 100K and $1 million portfolio. We are also in gap fill and reverse crude. I'm going to show you that. This is a look at gap fill and reverse crude oil, another one of our strategies trading today. So the market gapped up, pulled back. You see the bubble fill right here, 57.04. That was the actual trade, and the actual strategy did 57.03. So there's one tick of slippage, and so there's a nice run up here, about $700, and we pulled back. And so, in system trading, and especially in crude oil, you have to leave big open position profits. If you incrementally manage them, it's difficult to get enough average trade profit out of it. and you get too many rules. And so we've pulled back here, looking at the implications of OPEC and seeing if this will continue on higher. So it's a little bit of a profit here. And you see this trade we took yesterday in gap fill and reverse crude as well. Short trade, finished the day with a nice profit. Got short at the strategy 58.07. The actual fill was at 58.07, and we covered at the strategy said to cover at 57.26, and the actual fill was 57.26. So sometimes you have to click on two different bars here to see the actual fill versus the strategy. So the trade again is the actual fill, and the strategy is the actual cover. So if it's next bar at market, or if you use that in the programming language, sometimes the fill and the trade will show up on different bars, and so other times they'll show up on the same bar. So this was a limit order that got filled, and over here today it was it turned into a market order because our entry price was below the limit order. It was going to place a limit order below a certain price, and we were already there at the time we were going to get in, so it ended up being a market order. And so it won't take a slippage there. And so you see the hypothetical profits on this trade up 200, and so real time is 190 because we won't take a slippage at that point. Over here, we talk about beating the system. In coffee, we beat the system because we take out $75 slippage in commission, and we didn't get any slippage, so we only had to take out commission. So our strategy did better than our hypotheticals today because we did not get any slippage. Other days we do. Yesterday in crude oil, we didn't get any slippage either. And so we typically take out $25 for our hypotheticals. You see the hypotheticals yesterday were plus 785 at this point, but the actual trade without slippage and commission was 810, and then take out commission on top of that. So that beat the hypotheticals as well. When your slippage does better than your anticipated, then your strategy results will beat the hypotheticals. And then if it's worse than the anticipated, then you do worse than the hypotheticals. And so there's a little bit of a standard deviation in slippage. And I just want to show you the latest trades and show you the slippage in the bubble and fill arrows. And our equity curves are bouncing back a little bit here at the end of the month. We're looking forward to the last month of 2017 starting tomorrow, and we've made some adjustments, and so we're looking for a bounce in equity curves from the drawdowns in those portfolios.